Good afternoon, everybody. My name is Sean Overton, and I'm with OneStepRemove.com. And today you're joining me for the webinar, Find Indicators That Work in Under 5 Minutes. I'm going to introduce you to the Quantilator. The Quantilator is a section of the One Step Remove website that's currently hidden. So it's going to be your bonus for attending today. You're going to get one of the first peeks at it. And the whole point of the Quantilator, I started talking about this back in December. I really care about building up my library of trading ideas, of indicators that work and how they work, and having a quick, accessible tool that'll tell me what's good and what's not good. So that's what we're going to cover today. The target length for this webinar is intended to be about 30 minutes. It's honestly a pretty simple point. It's extremely powerful, but I don't think you're going to find it very hard to understand. And once I introduce you to why this is so important, and then the short part of how to use it, I'll take questions at the end just to make sure that you guys are able to digest it, and we'll go over some of my motivations for doing this. But this is all totally free to you. So this is going to be the best 30 minutes that you're going to spend on your trading today. So let's go ahead and dive into it. Now, a little bit about me. My name is Sean Overton. I'm the owner and founder of One Step Removed. I got my career started in FX back in 2005. I worked as a broker at FXCM. Regular broker, you call up the customer service. That was me 12 years ago. Back when I was starting, though, I got my teeth wet on the Sentiment Fund, which was an algorithmic trading strategy that FXCM hosted. And I raised about $40 million for that fund with me and my team. But what really got me excited about the Sentiment Fund was that it is totally algorithmic. It introduced me to data. It introduced me to systems, and I thought, yes, this is for me. I want to do this. In 2007, I left to start One Step Removed, and that's what I do. I build trading systems. I do programming. I help people design and analyze their ideas and hopefully make them better. And by the time I had been doing this for a while, I saw the absolute need and necessity to dive into the math and the quantitative strategy making that's required to succeed. And I started from nothing. My background was in Arab history from the University of Texas. I only got my Forex job because I spoke Arabic. So for me to go from starting as a salesperson basically and turning myself into a quant, I had to go back to high school math and start with pre-calculus and start doing everything from scratch: the statistics, the calculus, the linear algebra, all that. By 2011, I was getting pretty well up to speed, and by 2012-13 was publishing some engineering papers, which was pretty fun. So a little bit about why I think the Quantilator is so important, it's why it's going to help you, is my experience with my first trading system. So we're talking 2007, 2008, this is when I'm doing this. 2007 exactly is when I'm doing this. So I was a broker. I'm sitting at FXCM. I'm supposed to be making 100 phone calls a day as a salesperson. And instead, I'm staring at the charts, trying to day trade. And as you can imagine, I was doing neither well. So you can do one thing very well, or you can do multiple things badly. And that was my experience. But because I was staring at charts all the time, I did notice some price patterns that I thought were interesting. And I thought, okay, well, if these bars follow this pattern, it seems like they reverse themselves. And that was pretty much all I needed to know. I worked with a bunch of brokers, so people knew some programmers that I could work with. I paid a guy about $500 to write a strategy in TradeStation. I was super excited, really had my heart and soul set on getting these backtest results. And then a week later, I get my first version of the code, and it is crash and burn. I mean, it's not only is it not good, it's not bad either. It's just dripping with mediocrity. It doesn't make money or lose money. It was totally worthless. And the first thing that I did is what everybody else does too. When you get something that works, your immediate instinct, hey, I know what to do. Let's make it more complicated. If I just add more junk on it, surely it's going to work better. Well, as you can probably tell from the tone in my voice, that was not what actually came to pass. My idea was, I wouldn't have said this at the time, but with the perspective of posterity and knowing what I know now, essentially what I was doing was adding more crap. I had a bad idea, and I was trying to make a bad idea a good idea by making it more complicated. Of course, it costs time and money to do programming, so in order to add more crap, I was going to have to spend more money. And if you look at what happened after round 2, I spent more money, I spent more time, I was more frustrated, and I was no closer to my goal. But being the very persistent individual that I am, I did this several times until I finally realized, well, you know what, let's try changing tack. And the next improvement was, hey, let's switch markets, right? Forex isn't working for me. Surely it's because of the instrument selection. So if I trade stocks, I'll get a lot more ideas and more signals, so that should solve my problems. I didn't have to spend too much more money because the code was written, but I did have to spend money for some software to help me analyze a portfolio. And once again, I beat my head up against the wall. I'm poorer and I'm more frustrated. So the real end result, this was over a process of 6 months. And you got to remember, when I started doing this, this is before I started One Step Removed. So I'm a broker. I'm working 40, 50 hours a week. And then I'm coming home and I'm working on this stuff probably 20 hours a week because I'm completely obsessed with it. But at the end of 6 months, I've got a bunch of wasted time, a bunch of wasted money, software that I'm never, ever, ever going to use again. And I had nothing obvious to show for all that work. That, ladies and gentlemen, is the reason that I want to do the Quantilator, because I've been programming for 10 or 12 years, and I see people coming to me with ideas, and it's obvious that most of them are intent on going down this road. So this is my good faith effort to ride in as the cavalry and save you from wasting your time and money for 6 months and hopefully do things a little smarter and a little better. That's the reason I'm building the Quantilator, is so that you can make sure that you follow the principle, or avoid the principle, garbage in, garbage out. If what you put into your system is garbage, then what your system is going to spit out is garbage. We don't need to do back tests. We don't need to write full-fledged trading strategies. We can spit these answers out in 5 minutes. Now, and we'll go through this whole step here in the next slide. You look back at all that experience of 6 months of going through and writing software and trying to come up with ideas and just adding crap to a bad idea. What I did learn was that how important it is to protect my time and effort and my finances and my resources so that I don't waste time like this in the future. I want to make sure that I am maximizing my time, because at any given moment, I probably have 10 or 20 different ideas in the pipeline. I need to be able to throw away bad ideas very quickly so that I can focus on the good ideas. And because when I get a good idea, it takes me 4 to 6 months to put that into production. Now, I don't want you to think everything I did for that first trading strategy was a total waste. I got sick of going through this process, so I did learn a couple of programming languages and quite a bit of software and math. But that didn't feel like a consolation, because that wasn't the goal. The goal was to build a profitable trading system, and my first system didn't get there. Before we can help you analyze what to put into a trading system to follow the GIGO principle, garbage in, garbage out, we need to think about what actually goes into a trading system. So the 3 parts of any trading system are really simple. You got to enter, and you got to exit, and you got to choose how much to bet. Pretty simple stuff. You got to enter, you got to exit, and when you enter, you need to choose how much to bet. My key insight was that trying to get these 3 moving parts to all work together it's incredibly complicated. So you have to focus on only one element of a trading system at a time. Most people get to the indicator and they want it to tell them when to buy and sell. And what I'm telling you today is that you can't do that. You need to focus on the entry, on the exit, and then depending on the indicators that you're using in your system, hopefully you'll use the Quantilator to get some insight to how you're going to rationally and mathematically pair them together without having to do all the advanced math yourself. And you'll see this here in a bit. So once I finally made the key insight to really study what I'm putting into a system, I didn't build a system for probably a year or two until I finally found an indicator that I really liked. This one was my QB Pro system. And as you can tell, it did amazing, right? At one point, I was up over 1,000%. I was trading this on really high leverage, and I wound up with a 320% return. This was based on my SB score indicator, and the SB score indicator still works. I use it in Dominari, and I've got it in the pipeline for a couple other production systems. But for this particular system, the other indicators that I was using pooped out. But what I really want to highlight to you is not the equity curve. A lot of people get hung up on the fact that I had a drawdown. And for my goals, all I really cared about was making as much money as possible. So I started with a little over $3 grand in my live trading account. And this is a screenshot from my FX book. And then I pulled out more than $8,000 out of that account. So $3,000 turned into $5,000 in profit. For most people, that's a month of salary. That's awesome. I was super happy with that, and that was great. And then when the drawdown finally ended, I got it under control. I basically stayed flat for the rest of the time until I decided I've got better time and I've got better systems that I can put this money into. So that system, as I briefly mentioned, was based on the SB score. And what convinced me to develop this system was looking at the SB score. And if you've ever signed up for my SB score report, you've probably seen this image before. In fact, most of my webinars talk about the SB score. I don't want to highlight what it is. That's not the topic for today. All I care about is explaining to you how to understand this kind of image. There's a score here at the bottom to the left. So the SB score is 0 to 25%. And then it gives you an average return. So these blue bars are intended to show you that these are bullish returns, and the red bars are intended to show you that these are bearish returns. So lower scores, more money; bigger scores, more money for shorts. And that's it, right? I don't want you to get caught up on the mechanics of what the SB score is or what we're doing, because everything that we're doing on the quantitator today is learning how to generate images like this based on indicators that you care about, so that we don't just have to talk about the SB score. We can talk about MACD, RSI, CCI, and we're specifically going to talk about CCI today. I'm going to give you free access to the quantitator, and we'll go through analyzing that tool together. The reason I developed the quantitator is, one, for my own personal benefit. So every time that I had a new indicator idea, I was having to go to MetaTrader to export some data, to make some small tweaks to the code, and then I could spit out these graphs. But the problem is that every time I wanted to look at something new, it was going to take me 2 hours, 3 hours. And a lot of this source code's available in a programming language that I use to power the quantitator. So I wanted to build this tool so that I could just spit out numbers like this and keep basically a self-documenting library of everything that I think works based on my grading system. So before we go into actually using the quantitator, I want to ask, how many of you are reasonably familiar with using the CCI indicator? If you just type into the chat box and let me know your familiarity with the CCI. Are you really familiar with it, a little bit, or never heard of it before? And I'll take a minute to see how I can type. All right, Andy's very familiar with it. Doc is familiar with it. Max is a little bit familiar. Robert's a little familiar. Christopher doesn't know what it is, which is fine. Brandon's never heard of it and never used it. Oh, he's heard of it, but never used it. Blaze has heard of it, never used it. Baz, heard of, never used it. Simon's slightly familiar with it. Josh is reasonably familiar. So we've got a pretty diverse crowd of familiarity with the CCI indicator, everything from complete novices to total experts. And what I want to tell you guys is that it doesn't matter whether you know about CCI or not, because I'm plugging the indicator in and just giving you a firm answer of what it is. So you're not going to have to care what the philosophy is. You don't have to care what the formula is, how to use it. This tool is going to show you everything. So with that, let me start showing this to you. I'm going to minimize this here on the screen. And this is a preview of the Quantilator. I need to change the screen sharing though so you guys can see what I'm highlighting. Okay, can you guys let me know when you see the Firefox browser open with an image from my website? Okay, all right, so everybody's seeing what I'm talking about. There's two main components. The first is this form here, and this is what the Quantilator is, okay? So when you fill out this form, it's gonna let you do analysis based on real market data, which in this case is the Euro-US dollar 1 hour charts over a period of 2 years. And you're gonna look at two things. You're gonna look at the number of bins, and you're gonna decide how far into the future should I look at the future returns. The idea is, do you remember when I was talking about every trading system has three parts? It has an entry, an exit, and it has a betting size. Right now, we're looking at the entry. We're deciding whether or not the CCI is going to help us enter the market. Now, if you don't even want to do that, you can use my cheat sheet, and that's right here on the right, okay, where I give you some icons to help you do the analysis. So the market type for the CCI is ranging, and you can't see it on the webinar here, but whenever I put my mouse over this icon, it comes up with a little flyout box that says ranging. The usefulness, this is the icon for lukewarm. It's not going to be a gold mine, but it is useful. And then finally, this is just so you can look at this at a glance and get a idea of what this is. This is intended to show you that the CCI is an oscillator. So over the next couple of months and hopefully years, I'll be building this library where you'll be able to click on these indicators from the homepage and just stare at the icons and see basically cold, lukewarm, and hot. But what I'm really excited about is teaching you, when you find these lukewarm and hot indicators, how to really dig in and understand what's happening. So I think the best way to describe this is going to be present on every single indicator. You're going to have to choose number of bins, and I'll explain that in a minute. You're going to have to choose how far in the future you want to analyze, because if you're going to buy something based on an indicator, it should have some kind of time predictive value, right? It doesn't have to be amazing, but it should have some kind of clear, obvious implication that this predicts the future to some degree. And then at the bottom here, after you select the data, right now there's one choice. This is going to be unique to every indicator. The CCI happens to only have one input, which is a look back period of 14. Whenever we get to tools like the MACD, where you're going to have the 12-26-9, you would see 3 inputs here instead of just this one. But to give you this is going to be so much more intuitive when I just start using the calculator. So let me just analyze what we've got here, and then we'll continue forward. So what I've done is I've created a chart, and you'll notice, do you guys agree that this looks very similar to the SB score chart that I showed you in the past, that it has the colored bars, average returns, and the indicator values? Does that look familiar to you guys? You don't necessarily have to understand it right now. I just want to make sure that you're drawing the connection in your head that you've seen this image, or an image like this before. Okay, so this is the percentage return, 1 bar, which is this value here, in the future on the Euro-US dollar 60-minute chart. and we have 4 bins. The bins is just the number of bars that you see on this image here. 1, 2, 3, 4. So if I want to add more bars so I can get more granularity, I just change the number to 5, push analyze, and now I've got 5. That makes sense? If I want to have 6 bins, I see 6. And you notice this scale isn't changing too much, but it will always have the number of bars that you've asked for. So if you ask for 6, you get 6. You guys tracking with me so far? Okay. Now, what I want you guys to notice is that this isn't all that great right now. So when you're getting an indicator value on the 14 period CCI, 1 bar in the future, it's only giving you a percentage return of 0.004%. Let me write that in the chat box so you can put that in context. All right, not terribly exciting there. Okay, but also there's no real pattern here. So do you guys remember when we were looking at the SB score, all of the bars were basically declining? That's a strong measurement of correlation. And with the SB score, the correlation between the indicator's value and the future returns was almost negative 100%. Basically, you want numbers either close to negative 100% or positive 100%. And in this case, it's only negative 39%, which is a very weak correlation. Also, this is a little concerning when you look out, negative 200 is bullish, but also 200 is bullish. That's kind of strange. And this is the part where I really hope people dig into this, is that you're using a 14 period look back and you're using only looking 1 bar in the future. So there's 2 questions you should ask yourself. We're using a 1 out. Yeah, Brendan, exactly. It's random, right? It's not telling you very much. And that's perfect. I'm glad you made that insight. When you are using a period, you should not just be guessing, like, is the 14 better than a 13 period CCI? We're looking at 1 hour bars. So how many bars do we have in a day? We have 24 bars. There are 24 hours a day, so we would expect that a 24 period CCI should be a lot more useful than just 14, which corresponds to nothing. Maybe a 12 period CCI makes sense because that's half a day. Maybe an 8 period CCI makes sense because that corresponds to roughly the Euro, US, and Asian trading sessions. But 14 is just kind of like a made up number, right? There's no value there. So you shouldn't just use the period that's in there by default because everybody uses it. They're just using it mindlessly. There's no reason that they're doing it. It's just what everybody does. And since you're smarter than everybody, you're going to change it and try different things. So let's start with that. 24 is perfectly sensible. It describes 1 day. And I can explain that to my mother and she would get it. Or I could explain it to my wife and she would get it. And when I push that, well, it looks a little different. We're still getting strong results when the CCI is negative 200, but it's a little more encouraging. We have kind of a mix of data here, and then we have a strong bearish result here on the ends. And you'll notice this as you study indicators more in the future and you use this tool, because it's free, that strong overbought, oversold values for most indicators, especially oscillators, are generally going to give you the best trading values. But 1 bar in the future isn't very much. So we basically still have the same degree of predictability, which is 0.004% or 0.002% for the bearish moves. But you can see our correlation really hasn't done much. So what I really want to do is 1 bar of data is not very much when you're considering 24. So what do you guys think would be a value that we might consider using to analyze in the future? We started with a 24 period look back and we're looking 1 bar in the future. How many bars do you think in the future we should try? Christopher says 24. I agree. I think that's perfectly logical. Brandon says 8 or 12. Paul says 6, right? That's a fraction of a day. So these are all really good guesses. Let's try them all, and we'll work our way up. So Paul wants to try 6. That's a fourth of a day. Okay. Well, look at that. We're starting to get something that's a little better. We're up to 0.005%, and more importantly, this is starting to look a little more symmetric. So let's go up to 8. All right, again, that's a little worrisome, right? There's a lot of noise. Try 12. Okay, it's starting to look a little weird. But then we go up to 24, and look at that. We have a much clearer pattern. So what I want you guys to notice is how these values are changing over time. That we actually had, when we go down to Paul's guess of 6, right, these are actually our peak predictive values, and you have quite a bit of symmetry between this negative value and this positive one. They're about the same size. And as you start going up towards 8 and 12, so let's put in 12 here, it gets pretty noisy. And by the time you get back to 24, you have a much clearer pattern. However, the impact is weaker. So when we're going through the CCI here, we've learned a couple of things. That the CCI is giving us our strongest predictions on the front part of the prediction. So when we enter based on a 24-period CCI, we're getting the strongest impact from bars 1 up through 6 or so. Bars 7 to 22 or so is kind of noise. It's not really helping us very much. And then bars 20, and then by the time we get back to bar 24, you're getting a much more stable outlook. So let's say that you have a trading system and you want to build it based on CCI. Does placing trades based on the CCI crossing above and below 0 make a ton of sense? For the Euro US dollar 60-minute chart, looking back at over a 2-year period. So that's the way most people trade the CCI. They're looking for 0 crosses. Well, look what happens. When the CCI is crossing above 0, the average value here is just ever so slightly negative, and when it crosses below 0, the average value is just ever so slightly positive, right? So when people are spouting out how the CCI is a great 0 cross indicator, I mean, here's your proof. You don't have to do any programming. You just use a little bit of intellect, push the analyze button with a couple of thought out values that we've been talking about this for 5 or 10 minutes, because this is your first time doing it. But as I start adding indicators, you're going to be able to just rip right through this stuff where you can tell just from feeling out and trying different values what is likely to be a good idea before you spend a dime on programming or before you spend a couple hours programming an idea. You don't need to build an expert advisor to realize that building CCI 0 crosses on the 1-hour Euro US dollar chart is not a good use of your time or resources. What might be worth investigating, if you were interested in the CCI, would be looking at when the CCI is extremely oversold or extremely overbought. So if you were interested in finding long signals when the CCI is extremely oversold, you know that you're going to have your peak predictive value when the CCI is extreme, and it's been extreme within the last 1 to 6 bars. Or you also know that it's going to have a more smooth but milder impact when you get out towards 24 bars. So you're identifying zones where the CCI is giving you strong values, and you're identifying where your opportunities are for a potential strategy. A a lot of these indicators, people go into analyzing indicators with the wrong mindset. They go in thinking that that one indicator all by itself is going to tell them absolutely everything that they need to know about when to buy and sell. That's not an indicator. That's a trading system. An indicator is a tool to help you get to a system. And so what I want you guys to take away from the Quantilator, and as you start to use this today and over the next couple of months, is that you can slowly build up these ideas for how to combine indicators to think critically about maybe the 2 or 3 or 5 that you're interested in and how they're likely to interact. You're kind of using this to build your own reports and gain ideas. Now, I do want to open this up to access to everybody. I promise that this is totally free to you. It is. And I'm going to change my, well, actually, before I do that, does anybody have any questions about this analysis box or anything that you see here on the screen? Okay, Brandon says no. Yeah, we can do 24 bins if you want, Chris. I think once you get above a certain point, you're just going to get a lot of noise. But you can see here that you're getting a lot of concentrated values here towards the extremes. And then again, towards the extremes, it's mostly strongly negative. But then as you get towards the center, it's pretty noisy. So what I like to understand is I like to keep it to a small number of bins. But I mean, if you really want to, you can use 50 bins and go to town. But it gets really hard to understand what's happening. So I just like to use something like 5. Because it just makes a lot more sense to me. Okay, Max says, I'm sorry, but I don't understand what's an indicator's future predictive value. Okay, so a future predictive value is the market return, right? A lot of times when you're reading the Wall Street Journal, you'll read about the stock market and it'll say, hey, the stock market went up 1% today. That's the future return. So we want to know what percentage is the market likely on average to move up or down at some point in the future. So when I tell it to analyze 24 bins in the future, I'm telling it I want to know the average percentage return of the market up or down 1 day from now. Does that make sense, Max? It's just a really simple, I want to know, is it going up or down and by how much as a percentage? Simon's asking if I found any indicators are working better than I expected. Yes, definitely. But it's going to take a while for me to convert all these tools that I've built into something that is available on the site. I have my toolbox. I've got a lot of ideas, but it takes a while to convert them into Python, which this is written in. So as I do that over the next month or two, this will build up very quickly. My target pace for adding indicators is going to be once a week. And this is part of the reason that I'm hitting you guys up for this webinar and why I'm offering it for free is I need to know how to make this more valuable to you. I don't know how people are going to use it. I am not exactly sure how to explain it. It's simple in my head because I've done it forever, but that doesn't mean it's simple for you because it's a new concept. So what I need to do is to get your guys' feedback about how to explain this. Like, what did I do well with introducing this concept? Is there something you don't understand? Max's question about not understanding future predictive value was a great example, right? That was pretty simple. And once I understood that that was a weakness, he got it immediately. So I need you guys to kind of fill me with questions and let me know what you're thinking and what your problems are, and then we'll go from there. And I haven't even decided the final format of this site. So I wrote a description about what the developer expected to find. But I'm not even sure I want to do this because it takes a lot of time to write these articles. I really care more about just spitting out these cheat sheets. So if you want to weigh in on this too, do you find these descriptions helpful? And if so, how helpful are they? That's pretty much it. So I want to open this up. Let me go back towards the slides and maximize this screen and get back to okay. So I showed you guys the indicator working on the site, right? But there's one thing that I really care about, okay? This is a free tool. I've spent about 150 work hours building it. There's a lot of stuff that goes on the back end besides just the image, but I only have this running on a development server. This is a single core server, and there are almost 60 of you in the room right now. Okay, if everybody lands on the site and starts cranking through a million calculations right this second, you're going to crash my server. So if you decide to use it, I'm really excited, and I want you to just please be gentle. Don't push the analyze button 20 times after you've already pushed it. You know, play nice. But with that, let me open it up. So let me give you guys the URL here, and let me load this thing here. Okay, and so on the right side of your screen, you should see a link so that you can start using Quantilator. The only difference you're going to notice on the form is that you have to enter in your email address to use it, but all of you guys are already subscribed to my mailing list, so you're not going to see anything different in terms of the emails you receive. But that's it. Once you guys log in and click on the link and you start using it, you're going to start seeing the image right away, and you can start pumping calculations and seeing how it works. This is the link if you want to save it. I'm going to, as I build up the library, so for now this is going to be a hidden link. But once I get 10 or 20 indicators, so here in a couple of months, I'll add it from the main page. But since you guys have put in the time to watch this video and give me half hour of your time, I want to make sure that you get more value out of it than you put into it. So here's the link. You'll be able to go to q.onestepremove.com at any time and start using the indicators as I start loading them on the site. And you'll notice a difference in my newsletters going forward. So instead of talking about kind of random articles or research that I'm doing, for now, it's just going to be me pumping out indicators into the Quantilator so that you guys can get on there and start really using this tool. So make sure if you're going to bookmark anything, it's q.onestepremove.com. And then the full link for the CCI indicator is this that you see on the screen. But on the homepage of that subdomain, q.onestepremove.com, you'll see a full list of the indicators. So whenever there's something new, you'll be able to click on it and start analyzing it. And like I said, because all of you guys are already on my mailing list, you're going to be notified every time I put something out there. So just keep opening your inbox, keep opening the emails, clicking, and using this tool. And I think you're going to see a big difference in how you're building your systems and how you're thinking about the markets. But with that, that is the summary. So I was shooting for 30 minutes, and we're at 38. It's not too bad. And Paul asked if he'll be able to see the web page that I was showing you guys so that you can read through it again. Yes. So if you click on that offer on the right side, it says use the Quantilator for free, the orange button. It'll take you right to it. You just fill in your email address in the form, and then you can start using it as much as you want. Demetrius wants to try it tomorrow. That's preferred so you don't crash my server. You're more than welcome to try it. Now, like I said, just be gentle. Glenn asked if I'm going to do custom indicators. Yes, absolutely. That is the long-term plan. I am going to do custom indicators in the future. For now, I'm going to use the popular indicators that everybody already knows about. One, because that's the most established value. So my readers, every time I publish something about the stochastics or the RSI, they read it and they're really interested in it. So that's where I'm going to start in the beginning. But those have been pretty well picked over. So my goal is just to get that stuff pushed out. And then once it's pushed out, then we can start moving into custom indicators and building a much more diverse library of different ideas. Because I think you guys probably know this. The oscillator indicators are pretty well picked over. Most people aren't going to come up with an amazing system based on one oscillator like the stochastics or the parabolic SAR. So it's going to be important that we broaden our search a little bit and try something new. Baz asked, if I read correct, if CCI shows a certain number at the bottom, that means the odds of the next bar going in that direction. You're pretty close, Baz. It's not the odds, it's the average return. So the average return just tells you if you took 100 trades exactly like that, the average return of each of those trades would have been X%. So it doesn't tell you that you're going to win 58% of the time or something like that. It tells you the degree of market direction on average, but it doesn't tell you the frequency. So it could be 50%. It could be 90%. That part you don't know. In fact, that's a great feature request. Maybe I should put out the profitability, the percent accuracy as well for each bin. This is why I'm doing this webinar, guys. You guys make me think. Okay, indicator value is just, Blaze asks, what's the indicator value? The indicator value is when you put, say you put the MACD on the chart, it gives you a number. It'll say 0.001. When I say the indicator value, that's exactly what I'm talking about. If you put the CCI or the MACD on a chart right now, it gives you a number for the last bar. That number has a predictive value for how much is the market going to go up or down on average in the future. Juan asks, why did I choose the CCI? I just chose it because it's already in a library that exists in Python along with about 20 other indicators, which is going to let me just spit out, build a library really quickly. But I got to choose one to start with, and CCI is something I've known about for a long time, so I wanted to go ahead and start with that. Max asked if there's an indicator telling me just the difference plus or minus of the shades in the candlesticks. Not that I know of. There's a Heikin-Ashi approach, but that's not really what that's not what I'm looking at today. Blaze asked the lower axis, the lower x-axis. Yes, the lower x-axis is the one that has the indicator values. So that's what corresponds to what the CCI is telling you right now and what the likely percentage return is going to be in the future. Jean-Francois asked about a recording. I am going to make it available on my YouTube channel. This is to help people introduce this to the idea. And I'm still getting a feel for how to train people on the value of looking at indicators like this. So I want to make it publicly available and easily accessible. After the webinar, you're going to get a free, you're going to get an email that'll point you directly to the YouTube page. And then for everybody that happens to visit my YouTube channel, they'll also be able to see it there. Bazis asks, if two indicators are used, will you evolve into looking at that type of thing? I mean, that's vaguely possible, but that would be a massive project. It's starting to get into using user interfaces to build trading systems. And I don't think that's going to be the best use of people's time because it's going to require such a degree of automation and customization. So that's probably not too likely. Yeah, Jared asked if I'm going to have more data available. Absolutely. My goal right now is to get this out there and show people how to use it. I do want to add data for more currency pairs. Eventually, I'd like to add stocks. But before I put more time into it, because I'm already about 2 months into this, I want to make sure that people are actually going to use it. So that's my invitation to pump away and show me how awesome you think it is by doing a lot of calculations and starting to really get a feel for what the CCI is telling you. The more I see you guys using it, the more I'm going to put into it. So more data, more indicators, more everything. But it's going to be based on feedback because I'm not just doing it for me. I want to know that I'm carrying you guys with me. Okay, and if you guys have any other questions, type them in the chat, but we're already at 45 minutes, so I don't want to go too long. Forex are only futures. For now, I'm likely to stick with Forex, and then the next market I'd likely add is stocks. Futures are awesome, but it's a lot more complicated because you have to have contract histories. If I find easy continuous contracts, then there's no reason not to add it, but I think that's totally reasonable. Those are really liquid, popular markets, so it's something I definitely want to do in the future. I just need to make sure that enough people are finding the tool useful to warrant putting the time in. Jacques votes for the next indicator being the stochastic. Cool, Jacques, you win the vote, so I'll do the stochastic next week. That one's already in the library. You're welcome, Nicholas. I'm glad you enjoyed the webinar. And Andy's going to give it a shot over the next couple of days. And yeah, guys, just whatever comes to mind, because I'm just trying to build this so that it's useful. So if you can dig into this and let me know what you find confusing, what more information you need to understand how it works, all these things are super useful for me. So if you can give me the feedback of what your experience is like and what the problems are, if you have a tech problem, I mean, literally everything, spit it my way, because I want to know what's happening with most of you. And the best way I'm going to do that is by hearing from everybody. And Baz asked if he'll be able to tell which tools work and which don't. Yes. So the main thing that I want to show everybody is that cheat sheet. Let me go back to my screen share. Okay, so the cheat sheet, right? The signs that you're going to want to see is in the usefulness. So you're either going to want to see a small flame, or you're going to want to see the lukewarm indicator. If you see a snowflake, that's bad. And I really want to make it just that simple and stupid proof. Like, that's how I think. I like keep it simple, stupid. And if I just use the icons for hot and lukewarm, those are things that are worthy of consideration for a trading system. Doesn't mean automatically you should build an EA like that, but it definitely has merit. Whereas if I see something totally random and off the wall, I'll give it the snowflake, the cold icon, and that means that you'll just be able to skip over it. On the home page, there's going to be a list of indicators. That's just kind of a placeholder for now, since this is brand new. As I get further into this, I'll want to sort it so that you'll be able to see the hot indicators, the lukewarm indicators, the cold indicators, and then that'll help go, I guess, drive the process so that you can sort through these things faster. But that's going to be a function of me being able to get the content up, and I need a couple of months to realistically get there. And the more I can avoid writing and just putting the programming tools up, the faster I'll be able to do that. So that's one of my current considerations. I'm not going to, Glenn asks about submitting indicators, maybe in the future. I like the idea of adding that into the site. I've also thought about supporting custom indicators where you could export something from MetaTrader. Obviously, I want this to have some kind of commercial value for me in the future, but I care a lot more about making it useful and showing people how to use it before I really think about the money angle. So custom indicators is something I've considered. It's something I built for the site, but I need to make sure that there's enough interest there, because there's a lot that goes into adding in the credit card stuff and creating premium features. So for what I care about now, I just want to make it really good, and then we can worry about adding in those kind of features or those kind of values in the future. Simon, can you tell me what you mean by back testing a range of parameter values? Because right now, when we look at the CCI, it's just showing us all the parameters. So when we're creating these bins, it's finding, so say there are 10,000 bins or there's 10,000 bars in this data. 2,500 of those bins have a CCI average value of about 150. Another 2,500, their average value is 50. Another 2,500, their average value is about 60, and the other remainder is about 175. So when you go into when you're trying to backtest values, this is literally looking at all possible values and then giving you an average return for that value. Oh, yeah, I mean, that's something I thought about adding too. So you're talking about for the look ahead future, instead of just looking or for this look back period, instead of just doing 14 one at a time and doing 24 one at a time, maybe you could create a three-dimensional graph where you look at period values 3 through 14 all with one click. Also, something I thought about doing, takes a lot more programming, and I thought about adding that as a premium feature in the future. But for now, I just want to make sure that I get people up to speed how to use it. And then those are things that I've considered and want to add later, but it's not something that's on the immediate agenda. For now, I just want to build the library, right? I want to get this to where we've got 10 or 20 tools so you guys can just rip through this stuff and immediately get to building trading systems. Then if there are things that I can do, like adding custom indicators and creating the 3D charts so you can analyze lots of bars and lots of look-ahead periods, then that's something I do want to add. But I really want to make sure that people understand why this is so valuable and that they start using it before I worry about making an awesome tool that 5 people use. So right now I'm in the education phase. I just want you guys to see why this is so critical for building trading systems, because it's going to make your trading systems better. All right, guys, I'll hang out for another minute. If you have any questions, go ahead and type them in. But otherwise, we'll try to wrap up here. And I saw about a quarter of you guys have already tried using Quantilator. Did you guys have any trouble with the first couple values, or was it pretty intuitive? All right, guys. Well, I don't want to hang around and take any more of your time. Thank you so much for making yourselves available. I know you got a ton of value out of this. It's really exciting to finally get this going, because I've been talking about this for 3 months. So it's a real pleasure to finally get everybody on this. And over the next couple of weeks, we'll really pick this up and get the content out there so you guys can start finding new ideas and new trading opportunities. With that, if you have any questions, I'm going to type my email here. It's info@onestepremove.com. And if you have anything pop up, questions, tech support, whatever, you notice a bug, please let me know. Thank you so much. And again, my name is Sean Overton.